I'm Ed Althof. I'm with Loesel-Schaaf Insurance Agency in Erie, PA, established in 1921. I've been with the agency since 1981, been in the insurance business 40 years, but I'm really here to tell you about the last 10 years of my life. That is when I've had some very life-changing experiences take place. Everything in my life was pretty normal. Married, 2 kids, both of them teachers, mother that's a teacher, so everything was going well until we got the call that we needed to spend more time in Pittsburgh, taking my wife's parents to doctor's visits and the such, which seemed easy enough, but that turned out to take a whole nother life of its own, because within a month we were finding out that we were going to be at Jefferson Hospital in Pittsburgh at least 1 working day a week for the duration. The duration, as I said, was 6.5 years. It's not the driving to Pittsburgh that took it out of us. It is the emotional, financial, everything that went on with becoming a caregiver. Many of you have been caregivers. Many of you understand the pressures of being a caregiver, and that's what I'm here to kind of talk to you about. When I say it was a major life-changing, it was the biggest life-changing event that has taken place in my life. Getting married is a normal thing. I knew before I got married that was a decision I made. That was something that I knew was coming. Having children's just the next step. Those were decisions my wife and I made. That was kind of the next step. That was all planned out. The caregiving was not planned out. The caregiving was not anything that I ever expected. My parents, her parents, never were involved in caregiving, so we had no opportunity to learn much about caregiving from example. Okay? We, before this, saw some examples with friends of ours, but that was minimal caregiving. This all of a sudden took on a life of 24/7, being responsible for 2 people that were 125 miles away from us. Although, like I said, we were at Jefferson with my mother-in-law 1 work day a week for something similar to dialysis. About 1/3 of the weeks, we were there more than once a week. At the same time that this was going on, I had power of attorney on 5 different aunts and uncles. I just smiled that it was all on my wife's side. I was glad to do it. It was a privilege to be able to serve. But when I tell you that it raised chaos with our family at the time where we were having grandchildren and wanting to spend time with grandchildren and being torn this way, it became difficult. With my aunts and uncles, I had power of attorney. As I said, there were 5 of them. My job was taking in their income, which primarily was coming from dividends, a little bit of stocks, mostly retirement. All of the houses were paid off, so all of that was done with, but I was taking their income, writing the checks. In all cases, at least one of my aunts or uncles did go through the whole from assisted living to a skilled setting. In all of my cases, it lasted a good while, long enough that the common denominator for all my aunts and uncles was we went through everything. I say we, I was the one that was at the banks, at the savings and loans, converting their assets into cash to go into the checking account to write the checks. It takes a toll. For the last 8 years, I have been talking to groups of people about the need for planning for the eventual long-term care situations that you will see in the presentation about 70% of us will face. Okay? The other 30%, there are a lot of people, it has not been my experience of, I have not gotten calls that somebody died in their sleep. I have not been in a position where we've had accidents in the family. It's been long-term care events. It has been time and time again hearing I never planned to live this long. I don't know why I'm here. I don't know what his plan is for me and why I'm here. Okay? But like I said, the common denominator was my aunts and uncles went through their estates, and that was not something they planned on, but we'll go more into this through the presentation. Thank you. I will start going through the presentation. The difficulty of the presentation is you're not able to ask me questions to get the answers. We would like to communicate to each one of you to be able to answer the questions that this brings to mind. What we're going to outline is the 4 stages of planning: education, discussion, decision-making, implementation. We're going to talk about the misconceptions that are associated with chronic or long-term care. We're going to go through the value of early comprehensive long-term care planning and the whole idea of transferring the risk to somebody else. What is the first thing that comes to mind when you hear chronic or long-term care? Long-term care is not a place, it's an event. It's the whole process. It's an event that can happen at any time and any age. I get the calls on a regular basis with situations that are happening while someone is employed at the younger ages. I've gotten a call in the last week with a 50-year-old. So this truly can happen at any time or any age. This is what chronic long-term care is. It's being disabled, chronically ill, or cognitively impaired, requiring assistance with 2 of 6 activities of daily living. It's always 2, and it's always these 6: bathing, continence, dressing, eating, toileting, transferring. Hands-on, meaning a physical disability, or supervisory, primarily cognitively impaired. Supervisory would be, I might be able to cook a meal 6 days out of the week. On the 7th day, I very likely am not going to turn off the stove. I might be able to bathe myself 6 out of 7 days. I may need assistance on that 7th day because I can't be trusted. I'm not stable enough to stand or sit to do this. Expected to last 90 days or longer, certified by my primary care physician. When we plan for chronic care, to me, this is, with my experiences, the most important slide I have. This is where I said in the introduction, I would not want my children taking care of me. I have put plans in place that I would like my children to supervise my care, not provide the care. Supervising the care is a whole lot different than actually physically providing the care. My children are fairly close to Erie. My daughter's a teacher in Edinburgh. My son's one of the teachers in one of your schools, as an English teacher in a middle school in Allegheny County. I would not want them trying to actually physically provide the care like we had. One of the sad things, one of the things that brings out my passion is that statistics are that over 50% of family units fall apart when a loved one needs care. Planning helps maintain those relationships with spouse, children, friends, versus the role of strictly a caregiver. It helps to preserve the emotional and physical well-being. It would have done my wife and I a tremendous amount just to have had some plans put in place. Misconceptions. If I had a room full of people and I asked, okay, so if we agree that every statistic throughout the country, no matter who does it, 70% of 65-year-olds will need care at some point, everybody's going to point to the other person. We just don't think that it's something that's going to happen to us. Yes, you may be covered for the vast majority of it during your working career. But even during the working career, there is the chance that if I had a stroke tonight, I'm in an accident tonight, that yes, there's large amounts of money being paid for health care, medical coverage, but once I would go into custodial care, where there's nothing medically that can be done for me, that is not a covered expense. My family will take care of me. Well, I've talked to you about some of that. We're going to continue to talk about that because that is one of those ideas that a lot of us have is, well, my children can do that. That is something that is very likely not going to work. I have enough money to pay for my care. That is highly unlikely. That I've had estimates from the experts of anywhere from $10 to $50 million to be able to make that statement. We're going to give you some pricing. I do not think long-term care insurance is too expensive. You may disagree, but this is what we'd like to talk to you about. Here are the statistics. 70% of all Americans 65 and over will need long-term care at some point in their remaining lives. 1/3 of stroke victims are under the age of 65. 43% of the people receiving long-term care benefits are under the age of 65. And that's what I said. I'm seeing a lot of this. I'm seeing the early stage Alzheimer's. I'm seeing MS. I'm seeing a whole lot of different claims that are taking place during the normal working career. 18% of my group, which would be baby boomers, are expected to have some type of cognitive issues. And we got 10,000 baby boomers turning 65 every day. I'm already covered. I kind of explained health insurance as long as it's during the working career. Health insurance is designed to take care of our medical care, not our convalescent care, not our custodial care. Disability income insurance is to help recover our income, to pay our bills, our normal day-to-day bills, mortgage, rent, auto payments, groceries. That is what disability income. You may collect on both. Very likely, I have people that are collecting on disability income and are also collecting on the long-term care. Government programs. Social Security on your statement very clearly, bold printed, states it does not cover long-term care. Medicare has a very excellent rehabilitation benefit. It's strictly for rehabilitation. It's meant to get somebody out of the home and back into their setting, and it's limited at best to 100 days. Convalescent care would not be covered under Medicare supplements. This is just to kind of talk to you about the plan of having my family take care of me. I've got friends that have tried this, and 66% have had to make adjustments to their work life. I have a friend that has had to retire early to take care of his wife who has early stage Alzheimer's. 20% of caregivers cut back work hours going to part-time. Well, you can see where this financially starts to affect the whole retirement picture. 48% lose a job for various reasons. 80% report contributing financially for care for a parent. 22% are taking leaves of absences. Very likely you may know somebody that has gone through this, but to actually 24/7, you're looking at 7 days a week. Who's going to take care of mom, dad, sibling for this amount of time? What we're also running into is a tremendous amount of people that are still taking care of children that are living at home and also taking care of parents. So the sandwich generation. These are Pennsylvania averages, so I would expect in Pittsburgh to add a minimum of 10% to these Pennsylvania numbers. You can look at them. Home care aid, you're looking at $24 an hour. Assisted living, you're looking at, this is state average, you're looking in Pittsburgh over 40 grand. Skilled nursing, you're looking at well over $102,000 in Pittsburgh. 2 years ago, I was paying that for my mother-in-law in a place in West Mifflin. They wanted to put her in a place that was going to be $111,000 a year. One of the first steps in the planning process is it's very difficult. It's not a subject that we really want to talk about. We have every reason not to talk about it. Bottom line is we have to have the courage to have a candid conversation with your spouse and family members and talk to them. What are we going to do? How much time should we spend planning to protect the family unit? I contend we should spend a lot of time protecting this unit. These are some of the things that you just need to think about. Who is going to take care of me? And what's the effect going to be on them? What if this doesn't happen to me? I'm 61, my wife's a year younger. What if it doesn't happen in the next 10 years? Very likely will not. What if we both are needing it at the same time? This is what we ran into with my in-laws. This is what I ran into with a lot of my aunts and uncles, is they went along nicely for a long time, but when it caught up to both of them. Where's the care going to be provided? There were a lot of reasons why we kept them in Pittsburgh. How will we change our lives? Big thing is, how do we maintain as much normalcy in the family unit? Not being a burden to your family. We believe that planning with insurance is just the logical continuation of risk. It's the reason people buy life insurance. It's the reason people buy a lot of insurance programs. We're protecting our loved ones while we're alive. It gives you, your loved ones, the opportunity to be supervising the care rather than completely rechanging your lives and providing the care. That's a difficult thing to put on children. That's a difficult thing to put on siblings. That's a difficult thing for a family unit to survive. Long-term care insurance allows family units to maintain their relationship with you versus being in the role of a caregiver. It definitely helps in preserving the emotional and physical well-being. This chart is just giving you a little bit of what the risk is. The risk of having a homeowner's claim, this is the upper left-hand corner, is 1 in 1,200. The grid has 1,200 squares, so that shows you the 1 in 1,200. The chance of having an automobile accident of any major sort is 5 in 1,200. So you can see the 5 dots. It's not, we insure from both of these. I would never think of not insuring for these. Large medical claims, much more frequent, 105 in 1,200. But now we're at a long-term care event, and you're at 720 out of 1,200. So it's just to give you a different way of looking at this. Long-term care insurance provides a dedicated stream of income for your care, minimizes financial, emotional, and physical impact, protects income and assets and financial future. A lot of what I was doing with converting my aunts and uncles' estates into cash to pay the bills was during a downturn in the market, a downturn in the economy, and it was difficult then to month see these assets going down, but yet needing to convert them to cash. It provides access to quality care, it preserves our independence, and allows your investment portfolio to execute for the purposes intended, minimizing and eliminating taxes, passing assets on to the surviving spouse to eventually go to the children. Preserving independence allows you to stay at home as long as you're physically able to. A little bit about Life Secure and the program that's being offered. This is offered to the employees, their spouses, family members being parents, siblings, children, as long as they meet those age requirements. You individually are going to pick a benefit pool, a monthly benefit to pull from that benefit pool, and then that's going to determine your monthly premium. We've got some very nice web design programs where you're able to fine-tune it down to make the premium come out to what you would be able to afford and want to do. They all have a 90-day calendar day elimination period. So if my doctor states that today's the day, I no longer can do 2 of 6 activities of daily living, 90 days later I would be receiving a check. It includes a guaranteed future purchase option, so every 3 years you would get an opportunity to increase your coverage. Waiver of premium takes place while I'm in claim. We've got a number of optional benefits that are involved here. The advisory services helps with the whole claim at the time of claim, dealing with what services are in the area, who would be the best. I talked to one of them this week in finding adult daycare for somebody. So there's a lot of services that are built into the program. Simplified underwriting is a situation where this will be the easiest for somebody to ever pick up the coverage for health reasons. Health is the number one reason people are declined for long-term care coverage. This is not to scare anybody. We think we can help anybody pretty much in any situation. But this simplified underwriting is a 6 health question thing, including height and weight, but it applies to full-time employees and their actively at work spouses, even if that actively at work spouse is self-employed. It does require 20 hours per week for the spouse. They also do a prescription drug screening with a national database. There's questions about prescriptions, and details on current medical questions are not asked at this time, but they will see some prescription drug things with your answering no to these 6 questions. This is a one-time offering. Let me repeat that because this is kind of key. This is not going to be an annual open enrollment. This will be a one-time opportunity this year to purchase by answering no to 6 questions. Anytime later than this, for existing employees, you will go through an entire medical underwriting where we will be purchasing medical records, and then it just depends. Reason I say this is the number one phone call I get is I've decided to do something, and the reason I've decided to do something is because I've just had a drastic change in health, and now it means more to me, and now I think it's the time to do it. And I get these calls at all ages, but it still gets back to something has happened to our health, and that is why it's now taken a drastic change in my priorities. So this is a one-time opportunity to get this coverage with as little underwriting as possible. Here we have some average monthly benefits. So let me walk you through average monthly premium versus the average cost of care. $100,000 pool, of which after 90 days I would be able to draw $3,000 monthly benefit. I will remind you that built into this is every 3 years you have the opportunity to have this increased. But at this time, if I'm 50 years old, this coverage would cost me $49.42 monthly. This will be billed to my house. This in relation to 1 hour of home health care is $24 an hour. Assisted living is going to be a minimum of $3,263. If both you and your spouse/care partner apply and are approved, these rates would go down for each of you by 30%. So that's why I say I do not think these are out of sight. I think these are very reasonable for the coverage that would be purchased and the well-being that could happen to our families. With the discounted employer program that's being offered, we believe we can make this affordable to you by the design of the benefits. Why purchase now? Younger, active lifestyles. We just are doing more ATV. I had an ATV accident last week, so that's why it's on the top of my mind, is ATV accidents just were more active than other generations, and the ability to have accidents or injuries is greatly enhanced. Gives the ability to balance the money you put into retirement plans with the cost of a long-term care policy. As you know, you read about it every day, modern medicine is diagnosing diseases earlier, and it's extending our lifespan. As we go along, what we have seen is every year for the last 5 years, the underwriting by all insurance carriers has tightened, meaning it makes you ineligible earlier than it would have 5 years ago. So it's not something that can be put off until that health situation takes place. Premiums are based on 3 things: age, health, and plan design. You are never as young or as healthy as you are today. The next step is we would like you to go online, sign up for a personal consultation. That consultation may be taking place in numerous ways, including a face-to-face. I've got a number of people that are working with us, and we can go to houses. We're available in the evenings, and we're available online anytime. Thank you for your time. Goodbye.